What's up, everybody? Hope you guys had a good trading day. I didn't take any positions whatsoever. Had a nice, well-deserved sleep last night. Slept in, got my ass to the gym, and yeah, I didn't trade today. That's all. I didn't trade whatsoever. Bank holiday in Europe. Wasn't sure how that was going to play out. So there was I didn't get down into like the nitty gritty of the lower time frames, but there was some interesting PA that I want to talk about so that we can just kind of go over it together. Anybody take trades today? There's some tricky stuff going on up top here. I'm going to go over that a little bit. I'm sure a lot of you guys saw that. Okay, so I'll wait like 2 minutes, see if everybody wants to get in. Get rid of Photoshop. Okay, so from left to right, basically, yeah, this is sort of like tricky to decipher, but the bottom line with this setup today, you know, there were some valid sells or sell sort of ideas that presented in here, and hopefully I'll be able to sort of shed some light on this. But the bottom line is like order flow on a higher time frame is like we're very bearish, and we kind of talked about like this POI down here. This is the only area that we're really looking for any kind of like half decent longs from. Basically what I'm looking at here is that we've essentially had an order flow realignment basically when this sort of broke right here, right? So what I mean by this is it's very simple, actually. Let me just zoom into this area. Essentially, we've got a, you know, sort of high that was presented right here, right? And we've essentially come down and sort of broken through this demand zone resting right here, right? This sort of like, I think it comes, yeah, it's not quite a flip, but it's basically the doji that happens right before. So I would call this where, you know, order flow is trying to realign for us, giving us a potential for a strong high. Where it really gets confirmed is ultimately when we break this low right here, right? So we're basically saying that, okay, like ultimately we've had you know, a demand failure that happened over here. We've also now broken the low. Yes, it's only with a wick, but we're trading with expectational order flow from the higher time frame. And essentially what I looked at is like, okay, obviously, like I don't know that I would have traded from here personally. I probably would have looked for more of confirmation entry, which is essentially what we got here. So this high looked to be strong. It comes from an area that obviously has like a huge take on liquidity, pushes us through. You can see that we sweep through this. We basically come up into here, which is probably some form of a flip zone. And yeah, so ultimately from left to right, you know, the confirmations sort of like showed themselves. Once we came up into this region here, we failed to sustain or break this high rather. And then ultimately, as soon as we started to break down a little bit further, you can see that obviously like, okay, we can see kind of what the next play is. And ultimately, a lot of people probably would have thought that maybe this high would have sort of given way, which is reasonable to kind of assume with the amount of liquidity built up. However, we got the higher time frame narrative on our side to obviously make new lows. So when you look at this and you say, okay, well, you know, ultimately, maybe I'm not looking to trade in here. I want to see some further confirmation. And this is like where confirmations and just, yeah, being patient with the market is going to pay you, you know, the highest amount of money. So what I looked for was the aggression. Okay, first box that gets ticked for me is the aggressive move from the extreme, right? So once we get that aggressive move away, we get the push off, right? So once we break this structure point, we get a reaction, right? We get a push, and then you can see volume sort of starts to die down, right? So then we obviously have liquidity building up right here. Boom, we snap through it. As soon as we snap through it, we get a nice recovery. Now, you have to be mindful of the fact that we're looking to obviously trade pro trend, right? Taking stuff from here, this is counter trend against all time frames, right? Taking longs in here doesn't necessarily serve us very well, right? Because we're just looking to capitalize on the easiest moves, and that's kind of like the way that I'm shifting the community and the models that we're sort of teaching to just stay aligned with higher time frame intention and not bother with anything in the middle. So with that being said, ultimately we had levels of liquidity to take into this POI. Right now, what I want to kind of talk about very quickly. So we got 15-minute liquidity. Okay, levels of liquidity to take. This doesn't really come from like a valid flip zone. You can see that the flip zone that is really of interest, at least for me, was sitting kind of like in here, right? This entire sort of range. And then, yeah, from basically above here. So demand. So it doesn't necessarily need to be like one specific candle. You needed to see that basically demand couldn't sustain. So you could actually take this entire demand range, something like this, and say, okay, well, what caused this demand range to sort of fail, right? And it's just about interaction. It's just about understanding like who took control, where did they take control from? So I looked at this area right here, and again, didn't take any trades, but just looking at it in hindsight. So obviously we've got a high right here. We don't really know that it's supply as of yet, up until we essentially break some form of structure, right? So once we broke through here, this kind of gives us that order flow shift that we're looking for. And the area that gets really interesting is that you can see all this liquidity built up right in here. We've basically induced this high right here, which is perfect. Now the candle that actually causes this to get induced is this guy right here, right? Candle that takes liquidity, that's this guy. So the important thing to notice is that basically, let me just get rid of that. This entire candle, this is my supply range. This is the one that I'm most interested in. And then from there, what I would do is start to refine based on essentially what that's providing for me. So if I was to just kind of zip this across like this, you can kind of see that, okay, well, ultimately you can see the doji that kind of happens in here. This does come from an interaction zone. It pushes right through. You can see where the volume sort of kicks in. So this is kind of like that last little place of supply. But I would look at the entire range. So let me get down onto the lower time frame to just kind of explain the markups that I sort of have here, and we can talk about this a little bit further. So let me peel this guy back. Okay, so going over to here, first and foremost, you can see a little bit more the details that I'm sort of looking for, right? You can see this last push down, right? This pushes across. Okay, we get the interaction. This is basically the last piece of the pie to be able to essentially, what am I trying to say here? God, I'm choking on my words. This is the last piece of demand sitting right here, taps in, basically blasts right through. The area that it blasts through from is basically this refined POI. Okay, so easy peasy, should be pretty easy to recognize. The best part about this is that we sort of have this level of liquidity to essentially take from, which is here, as well as this high right here. So ideally, we're going to want to see the run on buy side liquidity to be able to then confirm a little bit further. So you can see that we have a nice bit of inducement that comes off of this POI right here, right? Boom, we get the chalk, come down, essentially tap in, and then run the high, right? So this is just like a telltale of like waiting for your POI to get swept, and then ultimately start looking for confirmations once liquidity has sort of cleared. So the first area that you could have essentially got interested in would have been, so let me just get the bar replay tool. So let me actually zoom out before we get too far ahead. So the bottom line, and I hope everybody can sort of understand this, but because we're reacting to yeah, there is demand in here. We've got a sort of buy to sell that got broken through, obviously proving to have some sort of, or some form of demand within here. It also comes from an interaction zone, which is a supply turning into demand at its extreme and then breaking through. So this move, at least in my opinion, would be basically classified as pro trend with the M15, right? The trend leg is sitting right here. This is swing structure, swing structure. This is internal, all that kind of fun stuff. But the idea is that we are trading against the flow of money based on the fact that we're leaving from an unmitigated demand zone that is a relevant POI. So can I get a 1 if you're understanding, and a 2 if you have a question about that specific portion at least. And so we can all agree that right now we are pro trend, however, we are counter order flow. Cool. So what do we need for confirmations? Well, it's very simple. Okay, we need to essentially see if we are counter order flow and we have a refined POI, which we have an interaction zone. This is a valid zone for us to start looking for a position. I would say that we need to see a 1 minute change of character, right? So ultimately, we've got a 1 minute change of character that happens right here and right here. So once that happens, we need to say, okay, well, ultimately, if you have the seconds chart, fantastic. If you don't, you would have a limit order sitting probably on this wick, right? That's the area that takes liquidity. So in the case that, let me just peel this guy back a little bit. In the case that you potentially put an order on in here, right? The idea would be that you would probably put it on something like this. You may have yourself like a 2 pip stop ideally. You may have got wicked out on spreads. Depends on how aggressive you are with your stop loss. 1.5 is probably what I would have had, and I probably would have got taken out of this. So this is where obviously the seconds chart is, the secret sauce to the whole operation. Before we get into the seconds though, you can see that we have a flip zone that happens within here. Yeah, there's a small take on liquidity probably on the seconds, but this will probably get ran into our extreme. And then we can look to sort of confirm it a little bit further, right? And that's basically the whole idea, is to get added confirmations to be able to get ourselves in a position to essentially stay on the winning side of the market, right? But it requires all this patience. So we've got the order flow shift, boom, V-shaped recovery, come back up. So what I want to do is just kind of go like this and block this off like this and jump down onto a 5-second chart. And essentially what you can see is that as soon as we come into the extreme, we get nothing, right? We push right through. There's nothing really showing us to get into the market, right? Like, I mean, this is not a chalk right here. A chalk is like a demand failure that would happen ideally, and I want to repeat this, ideally underneath here, right? So what causes this to break? And I would say that the only place that causes it to break would be underneath, and the aggressive entry would be basically doing something along these lines right here, right? And saying that, okay, like essentially we've broken from this level right here. If you wanted to get involved on maybe the flip, because now we've essentially liquidated the high. So you have to remember that when we liquidate this high over here, the idea is, and we see this sort of aggressive move back in to the range. The idea is that chances are we're not going to want to take a whole lot of liquidity coming back up into the extreme, because we've already done that, right? So if you wanted to get involved with something like this, and for the record, let me just kind of go like this. If we actually follow the flow chart exactly how we're supposed to, little sidebar here, essentially, we get this first tap into the refined POI. What are we supposed to wait for once we actually get the tap in? Anybody? Yeah. So technically, we're supposed to wait for the sweep of the actual POI, and this is just like an absolutely prime example of how that works out. But yeah, I mean, nonetheless, like we see the change of character that happens here. There's no reason to not want to confirm these areas, but you can just see that we don't actually get any interaction here to be able to get in. So there's no valid trade from this level unless you were putting a limit on the 1 minute extreme. So does everybody understand that so far? Cool. 5 seconds saves you a lot of trouble, man. A lot of trouble. It just gives you that added sort of confluence that you would ideally need. So with something like this, and you see the sweep of the POI, and knowing full well that once the POI gets swept, you could maybe see this as some form of chalk right here and get involved here. Personally, that's not something I would do. I think that's pretty high risk given the fact that we have unmitigated areas that are above this. I would probably look for further confirmation. So I just wanted to show that. Let me get down onto, or sorry, up onto the 1 minute, and let's go like this. Oops. Get rid of this guy. And basically what I'm looking at here is, okay, well, what's the next play, right? And ultimately, technically, if we break above this, the idea is that we want to see order flow realign, right? So once we break above, even though it's just with a couple wicks, we want to see order flow realign, because ultimately we don't know whether or not this is a break of structure or if it's a sweep, right? And the only way to confirm if this is a sweep is if we get an order flow shift immediately after, right? So I would classify this as my next form of V-shaped recovery. Okay, we get this basically this order flow realignment, and this is where patience comes in, right? And it's really tough to do, especially when you get glued to the lower time frame, but you just need those confirmations. And if you don't get them, there's no trade idea available, right? So now you can see a lot clearer what's going on, right? And you can say, okay, well, ultimately, if I'm looking at this right now, we get order flow realigned. I have a 1 minute POY resting above a liquid region, right? Even though this is swept and it comes from a flip zone, we have no level of liquidity to take into the actual POY, right? So if that means if that's how it sits, the only area that we can actually take a trade from would be above this level, right? So we get a small interaction between demand and supply right here. So basically, I'm looking at this as, okay, we have a level of liquidity to essentially take into the market, and this is the only area that I would look other than the actual extreme, and I would need to see additional confirmation. So once we start playing into this, order flow is realigned. We have it on the 1 minute. We've changed character again, level of liquidity to take. Now we can start looking to confirm on the second. So very, very simple. If you look at this right now and you see this right here, this doesn't tap into our POI. There's no trade idea for us here, okay? I don't care how hard you want to force it. The bottom line is there's no trade idea here because we're not reacting to anything that is relevant to our trade plan. Everybody understand? Cool. So with that being said, you basically, this is where, building this narrative, and like this takes time. This takes like 30 minutes, I think, to really play out. So you have to realize what's happening, right? So we build into this low, right? We create demand. Essentially, you have to remember 1 minute demand here is really nothing, but it's creating liquidity for us to actually support our move, right? So as this is happening in real time, you're printing candles, you want to do your markups, you want to understand that essentially we're creating sell side liquidity so that we can essentially start moving into the direction we want to go. So if we're creating sell side liquidity, wouldn't it make sense? And this is where that, what we do to one side, we must do to the other. So if we build liquidity on this, we need to take it from here, right? So if we take liquidity from this side, what's left? Well, it's only sell side liquidity, right? And obviously, this is easy to talk about in hindsight, but as this is building through, we need to start to recognize all these things, right? So let's go like this and essentially cut ourselves off in this region and start looking at the refined POY. So I've got a couple different levels here that I want to talk about. Ultimately, because we've essentially swept into the POY here, this is what I would classify as sweeping into the POY. I would say that we could get pretty aggressive with this personally. Doesn't necessarily mean you need to view this the same way. You could look for additional confirmations, but one of the ways that we could have easily gotten into this is this demand zone right here, okay? Probably more apparent on like a 1 second, but we don't need to look at the 1 second. Ultimately, you get this demand wick that sits here. We get a V-shaped recovery, boom, we push down, right? So we're not looking to get involved right away, but ultimately, as soon as we start breaking and creating supply chain, right? Supply chain, and we have a level of liquidity to take into this zone, I would say that this is a reasonable area to get involved. Does everybody understand this? Any questions about it? So moving further, ultimately, there's a couple other ways that we could was there a 5 second chalk? So with something like this, you can get a little bit more aggressive. So I'm going to just show you, like, obviously there is a 5 second change of character that happens right here. And the reason I can actually select this demand as a area to actually change character or shift order flow from is because it happens below here. So the reason that we broke through this was because of this wick, right? So again, like, I know that might seem a little bit abstract because it's just a 5 second chart and how much relevance can it really have? The relevance comes from the entire story that we've just built, right? So because this high was going to get ran as liquidity, as soon as we run the high, you can see the aggression in how we sort of move back down into it. So I would see this as a sort of supply, right, at the extremity, turning into demand failure with aggression. ultimately, I would not probably get involved right away right here. I probably want to see a little bit more confirmation. So once we actually tap into this demand zone right here, we push down, we come back, we have level of liquidity to take, we can start looking at these areas right here to be able to get involved. Does that make sense? For clear up the questions, Mike and Lucas, 1 or 2? 2? What's up, Mike? Cue your mic, man.
All right, man. So I definitely see that first 5-second chalk, and I was watching it, and I agreed there's no level to take into it, so that makes sense why you wouldn't get in there. But like I said, now that we've reacted to the next demand zone, and I understand the price has swept to that level, but would you not want to see another 5-second chalk?
Yeah. So if you were putting a limit, you could put a limit somewhere in here. But now if you wanted to realign it, you could do something like this, right? And just say, okay, like supply was involved right here, right? So demand sort of gets created. I mean, it's just a dot right here, but ultimately we come back down into here. Once we break through, I would say that this would be your next reasonable area to sort of get involved.
Okay. Okay. Gotcha.
I'm just trying to show a couple, because not everybody views things the exact same way. So I'm just trying to show the reasonable ways that you could have got involved in this specific trade. 5 seconds going to present like 2 or 3 different opportunities. The first opportunity would have been your aggressive one right here. Boom, just get involved right away on that retracement back into this. I don't personally like that because I usually like to see liquidity taken from the market, and there is no form of liquidity taken in here, right? Whereas right here, we have a level of liquidity to sort of take into the extreme after we've already swept the high and recovered very quickly. So that's why this would be a little bit more valid, taking something into, kind of like this little range right here. And I would probably still cover the high in this case. So let me just look at what that risk reward would be. So if we got involved, something like this, and basically just kind of cover this high, yeah, 1.6, like you probably get like a 1.5, 1.4 add spreads, 1.7 pip stop. Does that make more sense?
Yeah, I'm with you now. Thank you.
Awesome. Go ahead, Trev.
Yeah, hey Ty, how's it going, man?
Good, dude.
So I just got a quick question back on the 15 with the 15-minute POI selection and the POI that you use. I missed the first couple minutes. I was a bit later getting here. So why did you choose that as your 15-minute POI? Yeah, correctly, right there with the supply zone. So not that one, the lower one,
this one,
refined. Yeah.
So, and what I was mentioning at the beginning was that, like, ultimately, I'm not really selecting this POI to start. What I'm selecting is essentially looking at what area took liquidity here. And you can see the liquidity got taken right here. Where do we get that liquidity take from? It was this candle, right? And then ultimately what I'm doing is I'm saying that we're looking for something to happen within this 15-minute POI. Right? Because this is kind of like that push through that actually takes the liquidity. And I'm essentially looking at an interaction zone on a lower time frame here that kind of correlates with this entire push.
Okay. All right, cool. Yeah, I got that.
Thanks, man.
Thank you.
You're welcome. Okay, so let me just kind of keep rolling through this, guys, so that we can obviously try to bag this off quickly. And oops. Okay, so we would basically cover this high, 1.4, give yourself like 1.7 with spreads. So that would be entry number 1. Entry number 2 would be essentially once we've like confirmed that we've now created that bearish order flow. I would say that getting involved back in this range, demand to supply, small level of liquidity to take right here, depending on how you sort of view that. But yeah, I would start getting involved based on the fact that, and I would get a little bit more aggressive, especially with this specific circumstance, based on the fact that we've liquidated this high into our RPOI and showed aggression and intent to actually align order flow again. So again, this is kind of like a unique circumstance. I don't know where exactly I probably would have pulled trigger only when this happened right here. This would have been the only area of interest for me, I think, that to actually get involved. And if I would have missed this and just hesitated, I probably would have got involved once this broke through and then came back up into this level right here and just trailing above this high right here, knowing full well that we could still easily wick above and come up to here. But I would probably want to take that risk instead of losing the chance kind of thing in real time, just being completely transparent. I don't know that I would have taken a loss in here or anything like that, but I probably would have got aggressive with this. And if I didn't take this original position, I probably would have got involved in this flip. Cool. So Yeah, in terms of target, like those are the only ones that really fit our model. Other than that, you could maybe get involved with this flip right here. The only thing I don't really like with the extremity of this flip is that we don't really have a level to sort of grab. So yeah, like I said, the one that I'm really interested in would have been if I viewed this as that chalk, we have a level of liquidity to take into this, and then essentially just trail above that extreme. Cool. So yeah, and again, this boils down to like if you wanted to look at something in here, like there was no confirmations, which is, yeah, that's the sauce with the 5 second, right? It's there's nothing to actually confirm an entry off of this extremity. Go ahead, Nick.
Hi, Ty. I just want to ask, what are you looking for on the 5 seconds as liquidity to take? Because if you see that last entry you said that you could have taken, there is sort of like an up candle.
Oops. Right here.
No. The actual last entry after that yellow line, the yellow chalk on the 5 seconds. Yeah, there. Then you said you could have taken the entry. There is a little.
Yeah, right here, right?
No. Annotate. This over here. You said there's no liquidity to take, but I mean that is an up and a down. So what are you actually looking for on 5 seconds?
I want to see something like with a little bit more interaction, something like this.
Okay.
Yeah, I mean,
That makes
and
sense.
again, and this is like, this depends on what you back test, man, and what you build your case studies around. If you see more often than not that this is more than enough to take into your POI, be my guest. But personally, with something like this, what I would actually look to probably put a limit on would be something along the lines of like taking liquidity from this level and coming into probably here would be like a more reasonable area for me. Now I could get involved right here and maybe just trail my stop above here as well.
Okay.
Cool. But yeah, like I said, man, like I typically like to see a level of liquidity to actually grab. And what I mean by that is more of an interaction where we can actually sweep and then aggressively move away, right? Because the idea is if we actually take liquidity from somewhere, typically what's going to happen is that next POI above the liquid region is going to deliver price, right? Whereas something like this, we have a hard time knowing whether or not this is actually going to deliver or if it's going to get ran and then get delivered.
Makes sense.
Cool.
I was just doing my case studies and tests, and that's exactly what came up. Not sure if this is, or do I need to see more? Or
well, and again, this is where like personal preference, like, man, I'm not here to tell you exactly what to do. I'm just showing you the couple different options. And basically what you can do is say, like, I could have got involved here based on me seeing this as a winning trade idea with a level of liquidity to take here and here. If you have enough data to support that, man, don't let me tell you otherwise. The bottom line is I want to see something like this. I want to see more of an interaction, an actual fight between the two of them, and then basically a compression, expansion, and then delivery.
Okay, that makes sense. Thanks a lot.
You're welcome. Okay, so yeah, like I said, the areas that I would have probably gotten interested in are the ones that I just sort of mentioned. This would be sort of like your flip zone right in here. You could maybe get involved right here. Again, not really a level of liquidity to take, in my opinion. I think this is the most viable option that really, really correlates with the liquidity concepts that we sort of teach. So with that being said now, let's just kind of zoom out to our 1 minute. Let me get rid of this stuff. So very, very simple. I would be swinging probably for this 15-minute low. And then you could obviously, like, I mean, we can see what's going to happen here, but ultimately going out to our higher time frame, you know, this is the low that's weak. So you could easily swing this probably into this weak low. Now we could obviously come down, liquidate this low, come back up, match 4-hour structure, and then come down. So you have to remember, taking profits off the table is going to be ideal in circumstances like this, especially with how deep in price we sort of sit. So personally, I would probably be taking 50% partial here. And then I would probably take a full TP down in the extremity, to be honest with you, and not really worry about this last bit of R, because this is where we'd be looking for essentially a hedge position against the 4-hour structure points. Does that make sense for everybody? Makes sense. Awesome. Any questions, guys? trying to kind of migrate our focus over to only the ProTrend pro order flow side of things, getting us back aligned and stuff like that, as opposed to the counter trend flowchart models, which essentially get us back into ProTrend state. But yeah, we're going to look to kind of condense into one larger flowchart with all of our models that include potential for liquidity concepts, POI selection, and stuff like that. But we'll be working on it later on this evening. I've got a few things to do around the house, unfortunately, today, spring cleaning, all that fun stuff. So I'm looking to hopefully get that out to you guys later on this evening, if not early tomorrow. And then also for stuff that's come today, I've basically delivered a, what did I call it in the Discord server? Just give me 2 seconds. It's basically an explanation again on the flowchart models that kind of correlate with order flow shifts and how we sort of view pro order flow, counter order flow structure, and how M15 correlates with the H4 for us. So that's all sitting in the welcome series is where I posted it. So if you guys want to have a look at that, it's basically a piggyback video off of yesterday's forecasting call. And there's all kinds of different schematics. There's 4 different schematics for H4 ProTrend, pro order flow on the M15, and then basically same thing, counter H4 counter trend, M15 ProTrend, counter order flow, all that fun stuff. So there's all 4 models that we're going to be basically focusing on primarily within the community moving forward. So I would definitely go check that out. And like I said, it's in the welcome area for the video content, and it's the most recent video that we've just posted, and there's all kinds of PDFs to go along with it. So anyways, hopefully you guys enjoyed this. Like I said, didn't take any trades today. Had I taken some trades, I would probably have gotten involved in and around these regions based off of what I just sort of went through. There was a potential maybe for a loss or two in there, but if you use the 5-second chart, you would have been able to, you know, sort of had these added layers of confirmations to stay out of a lot of the losing trades. So anyways, hopefully you guys found this helpful. I will catch you guys tomorrow morning for the pre-New York narrative. We'll be back in full swing. And yeah, if you guys have any questions that come up throughout, you know, watching the videos or the video that I posted about the flowchart examples, H4 versus M15, feel free to hit me up, and I'm happy to answer anything that I can. So yeah, have a good day, and I will see you guys tomorrow.